Hello everyone, thank God it's Monday. Good, Friday was extremely volatile. We had a very big drop after some news. I think it was the NFP last Friday, the non-farm payroll news. Okay, so today we're entering the market, trying to find our channel, trying to find our equilibrium, so to say. And actually, this time I started from the time separator of Friday. So this is actually Friday's time separator, and from there I'm leaving with my regular diagonal normal steepness line, you could say. This lower bound is actually formed by the separator, the time separator from today. And as you can see already, this night around 3 o'clock, price hit this midline and then tested the bottom line of our of this channel right here. Yeah. Today's internal range, the top, the bottom right here, just as a frame of reference. Usually when we get a setup and then maybe some reversal, then it usually happens at the top or at the bottom of these daily ranges, and also on regular days, so not too volatile days, you usually see price action within these bounds. At the moment, price is still bullish. I did get a small interaction right here with this channel, which is normal because markets are geometric by nature, as we know. So we do get a small test of this channel, and there could potentially be two scenarios unfolding. And at this moment, I don't know which one will. The first scenario is price dropping to the bottom of this channel, and then basically throughout the day looking to rise within this channel up and then touch the top of this channel somewhere at the end of the day, or we're going to see a scenario where price will just zigzag, or maybe just pull up to the bottom of our to the top of our daily range, and maybe also hit one of these lines right here. These are 2x steepness going down, so we basically have this 1x steepness going up, and these lines are 2 times as steep, yeah? Coming from these time separators right here. So these are the two scenarios that could happen, that price could also hit one of these lines in this channel and then maybe move bearish through the day. At this point, we can't really say. So we will just wait, and I will get back to you later in the day. All right, guys. So I guess what we expected happened. What you're seeing here, the green lines are the 2x bearish channel. You can see price kind of pushing that and then being drawn strongly into that, testing this cross right here. So this cross is a bullish channel actually. So coming from the bottom, and you can see price action really kind of challenging that. You can see some strong moves here, and we were going to buy the lower bound of the structure. So I did that. I took a position here, especially since we had the center of our daily range here. And that was the rationale behind this decision. When price broke through, I actually took an emotional position. I hadn't drawn in this line yet, so I really regret taking the position at this point. I really do. I mean, this could have worked in our favor. And I could have, been glad with the result. But usually I like to take positions only on a rational place. So somewhere you have rational reasons for taking the position, and this wasn't one. So I wasn't really content with it. When I went in and then drew this line, and I saw, well, okay, let's just keep it there. Then the line was tested again, and I thought let's take another position here. And then I actually saw this movement happening. I don't think I had already drawn in this line either. So I was really looking at the red circle in this case, hoping for the market to change at this point, which it did, only for a short while though. That's why I'm not too fond of the red circles, which are basically these crossings of price with these time separators, and then extending your radius out to one of these inflection points. That's basically what these red circles mean. Okay, so, and I was looking at this and I saw this strong bottom formation, right? And I was like, that must be a line. That must be some kind of line coming from somewhere. And this is the point where I then drew in the line, which kind of then opened my my mind, or actually gave us some confirmation that price should be bullish, since this is such a strong support point. Yeah, but that broke. It went in. So these positions got burned. And like I said, it's like 1.2, 1.3% of equity or so. I mean, it might look dramatic, you know, 3 positions. But, you know, in the end, if you scale them down well, and you know, that I'm trying this out at this moment, I'm making assumptions, but I'm not absolutely sure, you just take smaller positions. Okay, so in this price movement right here kind of has a character of, you know, it's pushy, like it's not natural movement. You can kind of see this in the way that you have this channel down, and then the way I guess this price action looks right here. It's kind of, it looks like it's kind of dampened. It's being pushed down. You kind of see it's basically being pushed back to this line right here. The first trade that we then took was the rationale of having the same structure we had above. We copied it to the downside and then basically halved it. So we have like 1.5 times our structure. That was the rationale behind this first trade. Rationale behind the second trade is that this is the 2x bullish channel that you're seeing here, and it's really colliding with this 2x bearish channel. So that which really kind of has like a strong, a very strong V shape. And then the rationale behind this third trade that we made was actually the bottom of the daily range right here. So this yellow line, and then also our confirmation when price was then kind of riding this this line right here. So we took our position here, so below the daily range, and then it went a bit further for it to then snap back to the direction we were expecting. And as you can see, it's doing 2 things immediately. So the first thing, of course, you know, this big jolt. I mean, volatility was again very strong. So the first jolt was up against this this channel right here. Got rejected, but you can very strongly or very clearly see, like, this is the place where we're getting rejection a bit. And the first thing it's trying to do is it's trying to push inside this channel, and it's also trying to push inside this this geometrical structure that you see right here. Once price then keeps going up, this is for us kind of a confirmation that price will not stop dead in its tracks or reverse. And from there, you know, we really had a great break in terms of volatility. So it's really pushing up now. We're now approaching the top of the 1x bullish channel. I think this is the top though. I'm not entirely sure. Let's see. Yeah. This is it. So, and it appears to be pushing through. So what I actually think is that we should be wanting to look at the top of this structure, which is really huge. Okay, so we had this kind of V-shaped reversal that we identified down here. So we actually had 3 positions taken, since we had 3 you know, good rational reasons to do so. Price is now pulling up. And I think it's going to either look for this end of the structure, like to this top, maybe this inflection line, or it's going to be taken even further, maybe to this next inflection line, and then also to the top of this structure. And I think even the latter scenario is maybe even more likely, since this would be two times daily range. Okay, so and since we're getting such strong volatility, the channel, the bullish channel, is basically so strong being adhered to. I think there's really good chances that we're going to break the top of our daily range and then continue to the top of the structure. All right, so I'm just going to leave it at that, and then we'll revisit later in the day. All right, so in sum, I guess a great day today, a lot of bullish price action. And I kind of want to touch on a few things today. One is the small piggy up there. I'll explain in a second what he's about. All right, so let's get through this. In the so around noon, right afternoon, the beginning of the afternoon, the day looked really bullish and things were going really well. And we were expecting price action to at least hit this line, or maybe even pull past that to here. So we were expecting some extreme price movements. We didn't get that. So the question is, what did we get? So this is the bottom of our 2x bullish channel right here. This is the top of our daily range. Okay, so this is the upper bound and this is the lower bound of our daily range. So price action was kind of slowed down on this 1x channel right here, as you can see. So price action was held back. It was kind of finding resistance, and then it touched the upper bound of our daily range. Then it went through, and then we got a correction. Okay. I put the piggy here because I was expecting price action to go further bullish, so to go up. And there's a saying on Wall Street that reads something along the lines of bulls make profits, bears make profits, pigs get slaughtered. And the simple reason for that is either you overload your positions, so your exposure, or you just stay in positions too long. Why? Because you're thinking, okay, the run hasn't ended, this is going to continue, I'm going to get more profits out of this, I'm going to try and really squeeze out every penny. And then what happens? The market goes against you. So in this case, it wasn't that much of a retracement, I would say. And I was actually expecting this shape to carry price up for one less jolt. That obviously didn't happen, and I had to take profits here. Okay, so, and that cost me about 1.5 to 2% of my position, which is a shame. I mean, we got a solid 5% of our equity today, which is a really good day in sum. So losses included. All right, so I took a position here right before I drew in the yellow circle, and the rationale behind that was that price was going to simply just retrace to the bottom of this 2x channel and maybe kind of touch the top of this 1x channel, and then price was going to reverse back to the upside, and then we were gonna see some more bullish price action. That obviously didn't happen, and then I figured I could maybe try and employ some trick that I sometimes use to kind of pinpoint these bottoms right here. So you basically take a significant top, and from there you draw a radius to some bottom as we did right here, and so for you to basically find some other lows right here, touching the rim of the circle. A bit of caution, since you really need to take significant highs or lows. Well, your next question would obviously be, well, what is a significant high? What is a significant low? So we actually identified this high as a significant high since it passed our daily range. And from there, it made a strong reversal or strong retracement in the other direction. And this is usually reason enough to draw such a circle. That's one thing. The other thing that you really need some volatility for these circles to work. And even if you get these circles to work, like in this instance, there is no guarantee that these circles will then tell you, okay, well, this is going to be a low, and then price is going to continue up. Yeah? It's usually just for kind of finding the geometrical relationship between these lows. And these are always things that I like to stress. The market isn't chaos. The market isn't just a coincidence. The market is geometric in nature, meaning that if you have this low, then you automatically have this low and this low on the rim of this circle. And the reason for that is simply, to see these kinds of phenomena, you really have to make sure of some things. So for one, you have to, for example, log your chart ratio. So price time should really be in a one-to-one relationship. And you can also not dynamically change the Y and X axes on your chart, since if you then use geometrical shapes, that will go wrong horribly. Yeah? So really make sure that you lock your chart. I think the best ratio for doing that is a 1-to-1. So for example, 1 point of EURUSD to 1 minute. There could be a bit more bullish movement right here in the upcoming minutes or hours, but I don't think we can really make additional profits out of those. Okay, so for today, I think the major lesson was the biggie. Usually our rule is exit the trade wherever you know you can. So in this case, our entry was at the bottom of the daily range, so at the lower bound of the daily range. So we actually had a great run. We had a great run. We can either take profit here, or we can say, well, we're feeling lucky, and we kind of want to piggyback our way above this daily range a bit, and then maybe close our position here. And well, for me, the greatest annoyance is that I was actually sitting at my trading console when this happened. So I was actually sitting at the buttons, being able to push the button, and I didn't. So I was kind of breaking my own rule, and I was being too big of a piggy. Yeah? So, and usually pigs get slaughtered. In this case, I think we didn't have great damage done, but it's something to watch out for. Also, this position, I could have surely done it more at the bottom here, but I didn't employ this tool, as you can imagine. So I only found this geometric relationship in hindsight, unfortunately. Okay, so in sum, like I said, even with all the positions, 1, 2, 3, 4, small positions, I must add, these positions are a bit heavier. So this day could have been a big loser if price had really dropped further here and really cut through our daily range to the downside. Luckily for us, it didn't. We lost some small positions, but in sum, as I mentioned before, we made a plus of about 5% today. which is really great. And I'm hoping for similar volatility in the days following, so that we can reap some more profits from the markets. Thanks for watching. I hope to see you on the next analysis. And if you're trading, stay safe. Try out some geometry, and see you in the next one. Bye.